Hello and welcome back to Coinscrum Markets. We're here for our Friday wrap to look back on the week. Really pleased to be joined by Nick Mancini, Chief Community Officer at Trade the Chain. Welcome, Nick.
Thank you very much for having me. It's a beautiful Friday and I'm happy to be here. So appreciate the time.
No, it's our pleasure. So I guess we'll start off. The main talking point of the week was Mr. Musk threw a few spanners into the Bitcoin works or crypto in general this week, going from it seems a little bit schizophrenic with some of his comments, from being kind of full on Bitcoin bull earlier in the year now to kind of pulling up the handbrakes a little bit. What did you make of his comments around environmental impact of Bitcoin? It seems a bit strange that he didn't know that already.
It is a bit strange that you would think someone who would put $1 billion of an asset on their balance sheet would at least have looked into the environmental impact or the source of where that value comes from and things like that. It's funny, I'm actually in the market for a new car and I was test driving Teslas this week, and it really kind of brought a grain of salt in my mouth when I was driving the car. But back on the Bitcoin topic, it's very interesting because more often than not, the kind of opinion that Bitcoin mining is bad for the environment has been debunked. 75% of miners have access to renewable energy. Close to 40% of the current energy output is renewable sources. And if we're only 10 years into the history of an asset, and nearly 50% of the energy used to create that asset is renewable, I think that's a pretty good trend to move forward with. I mean, all of the banks in the world are not even on renewable or even asking to go renewable. Are they printing US dollars with renewable energy? Or what about down in Venezuela or Argentina? So I think the argument is a little bit silly, and I think it's more due to maybe some a different style of investor or shareholder at Tesla maybe ringing the bell and arguing for, Bitcoin's bad, US dollar's good, could be that, but something spooked him. Fortunately, he's not selling, so there's no market event that we can act on other than, the sentiment of it. But it's certainly through, all the positive Doge news that was kind of flowing into the cryptocurrency industry and the new wallet creation. That was a great narrative. And he kind of threw that into a huge, tizzy, basically lit it on fire.
Yeah.
And so sentiment definitely dropped, but we're seeing things recover as expected at key support levels, and the on-chain activity still looks good. So even though Elon tried to, mess with our fun, things still do look pretty good.
Yeah, maybe he's looking for some cheap coins, and I guess that it's going to be, it's an argument, it's a conversation that's been around and a debate that's been around since the beginning, or since Bitcoin mining went industrial scale. A few weeks ago when the hash rate for Bitcoin reportedly, it did drop very drastically, over 25% overnight. That was purportedly down to power outage in China, where much of the energy is generated by coal power. So maybe maybe if that's true, maybe that did give some insights that there is still a good part of the network using, fossil fuels. But, as we've seen, most of the movement for new operations outside of the US in the last few years has definitely been going after renewables, especially in North America, in Canada, in Scandinavia. So I agree with you. It's a bit of a spurious argument. As an industry as a whole compared to others, the renewable mix is much higher as a portion of the market. And, I think it is a strong argument that it will continue to drive that move to renewables going forward. But look, it's going to be an ongoing debate. We can't ignore it. It is important, but also maybe it's been a little bit overblown. Maybe Mr. Musk is just looking to buy some cheap Bitcoins. And the other thing, one of the one kind of renewable which hasn't been utilized up until now is really solar, and that's down to the requirement of 24/7 electricity for Bitcoin miners, and it's really about the cost of batteries and storage to properly utilize solar power. Now, if anyone in the market has access to manufacturing facilities in rather sunny places and is also quite interested in battery technology, could be Mr. Musk himself. So maybe he's just setting the scene for Tesla to start looking at the mining space themselves.
Yeah, exactly. And the funny thing about Bitcoin is it makes you an expert on everything, or at least you try to be, you know, everything from the financial system to how a blockchain works to energy consumption. And, you know, the crazy thing about Bitcoin is that I believe that it truly does breed and incentivize good energy consumption, because you're creating max value for the energy that you're giving your input. So your input needs to create max output. So what better way to do it than cheap renewable energy that you know can either store the energy that is not being used to mine the Bitcoin at that single time, you know, send that energy elsewhere, store it, you know, so that the future of the industry is going to be much more than GPUs and coal. Like that is undoubtable. And I think, you know, Elon is talking about DMing Doge developers. Like, why not just DM the Bitcoin mining pools and say, hey, what are you doing? How can I help?
Yeah.
You know, support the value that's on your balance sheet. You know, I would support the American government in creating stronger dollars. If I had a couple billion on my balance sheet, I would want to support Bitcoin as well.
Yeah, absolutely. Okay. Well, I think the other key takeaway is that during the last bull market, you might have been looking at Lamborghinis, and now you're looking at Teslas. So that's interesting in itself. But look, let's move on to see how all of that news has impacted price action. Bitcoin dominance. We've got a chart here. Obviously, there was a big sell-off in Bitcoin, as there was across the market. What we're looking at here?
Yeah, so Bitcoin dominance is the lowest it's been since about mid-2018. And I mean, if anyone's been around in crypto for a while, that mid-2018 was a bit of a rough time. And that was right after we saw the massive altcoin rise of 2017. So Bitcoin dominance is low, and obviously Elon kind of helped that or exacerbate a bit of the trend that was already happening. But basically, Bitcoin dominance means that how dominant is it in the market? What percentage is Bitcoin's market cap compared to all of the market caps of every single crypto? And right now, it's in the low 40s. Which is a little bit scary if you're a Bitcoin maximalist. It definitely means that altcoins are taking up market share, but it doesn't mean that it's happening in an unhealthy way. I think if the crypto market is to grow, Bitcoin cannot be over 50% of the market cap. I mean, if gold was over 50% of the market cap of all commodities globally, people would be like, that's a little weird. So I think it's completely healthy that this is happening. But it definitely gives rise to the questions of why is Bitcoin not running with Ethereum? Why is Bitcoin not running with these alts? And then it makes you think, you know, okay, why are alts running? Are we in alt season? How is Ethereum affecting all of this? So the Bitcoin dominance chart is a great one to just kind of level set and kind of say, here are my expectations. Here's a really good roundabout understanding of how the market looks right now. And then where do I need to immediately look? And I think the answer is probably Ethereum. And then how Ethereum is impacting DeFi, and then, you know, obviously the rotation back in. Because what we see with Bitcoin is Bitcoin goes boom, Bitcoin chills a little bit, altcoins start to boom, usually led by Ethereum. They chill out, the money rotates back to Bitcoin, and that's generally how the cycle goes.
Yeah, I mean, I guess you know, it's also whether you can see it as trading signals as well. And obviously, this isn't trading advice to anyone. But if we looked in 2017, you know, Bitcoin, when everything was going up, Bitcoin made its then all-time high around $20,000 in early December. And actually, it was after into the new year in January when the total market cap of all cryptos then made a new all-time high, driven by all of the alt market. But Bitcoin didn't confirm. You know, Bitcoin didn't go ahead and make a new all-time high. I mean, I'm a bit of an old timer in the markets. You know, people in traditional stock markets maybe look at something like Dow theory, where you have the industrial index, you have the transport index, and if they're moving in tandem, then all is good. But if one is moving higher and the other one isn't, then that can be a signal for a reversal. So maybe there's a similar dynamic here. Bitcoin didn't manage to get through that all-time high, and we have sold off since. It remains to be seen whether that's a pause or something longer term, but definitely interesting one to keep an eye on. Now look, let's move on to, you know, you mentioned Ethereum there. Interestingly, you know, at present, again, going back to Mr. Musk, Ethereum still operates as a on a proof of work algorithm, and it's moving to proof of stake. It sold off sharply with Bitcoin. One or two of the other proof of stake networks kind of have held up possibly a little bit better. But let's look at this next chart with Ethereum, what we're seeing here.
Yeah, so the next chart is basically just the basic Ethereum chart. So I wanted to just highlight the fact that we can see the white line is major support, and that's exactly where it bounced. So and then Bitcoin, it also bounced on major support, but it's very, because Ethereum just went purely parabolic. So to see this bounce that strong at that level with great order book support, meaning there's a lot of volume and liquidity. People are asking to buy at those prices more than they're asking to sell. So that's what we really want to see. And then we have, basically 4 solid green candles, 16 hours of solid green candles after that, which you don't generally see. And sometimes people will call that a dead cat bounce, and that's what we want to watch out for, basically a trick where the market makers will push it up to make it think that it's bullish and then immediately sell it back off to screw over retail. So we want to watch for that. But this is very promising for what Ethereum's recent price action. And I think the most interesting thing is the exchange net flows, meaning how many coins are flowing onto exchanges versus flowing off exchanges. And when we see coins come off exchanges, it generally means bullish movements, because you only move a coin off an exchange if you want to hold it long term. You're storing it for safekeeping. You keep it on exchanges for quick selling. So if thousands of ETH are moving off of an exchange, even during a sell-off event or around a sell-off event, that means that people are still bullish at this price. They are not wanting to sell. They are wanting to hold long term. So if people are bullish at 3,500, at 3,800, at 4K, if people are pulling those off exchanges, and these are large buys, these are not your grandma or your best friend buying $100 of Ethereum. This is large batch purchases. If you're seeing that with this price action, one would believe, we're looking bullish, but we need a few more confirmations. So I'm looking to see where this next 4-hour candle ends up. But based on what we're seeing on-chain activity, meaning, there's not a whole lot of bets being placed, volume is up, order book flow is solid, and then we have the fact that people are moving coins off exchanges. This is all very positive for Ethereum, even given the recent price rally and Elon's words.
Yeah, I mean, it's obviously been supremely strong against Bitcoin the last few weeks, almost doubling really against Bitcoin. I guess, things can't keep going up forever. So at least a pause makes sense. And maybe we'll come back to that over the next few months. And, it's the word flippening was being widely bandied about, the idea of the total market cap of Ethereum overtaking that of Bitcoin during the 2017 bubble. That turned around very quickly and drastically in the end, but now, we're getting back into those realms. So definitely want to watch out. Now, I guess with Ethereum, we can't talk about that without talking about the broader DeFi markets. It's massively fed into that marketplace, and talking about whether people are holding longer term. It's not whether they're just like putting Ethereum in cold storage and sitting on them. Are they putting them to work in the broader DeFi market looking for yield? Let's just look at this final chart, and what's this telling us?
Yeah, so this final chart is basically gross value locked on the entire basically DeFi spectrum. So all assets, and we're talking, Ethereum, Binance Smart Chain, Polygon, etc. So basically, the interesting part about this is it just shows the explosive growth over just a 3-month span. I mean, we're talking low or high 40s billions to low 120 billion. That's almost 100% increase per month, which is very crazy. So obviously, DeFi has been is kind of the darling child of the alt market, and it's definitely the driver of why a lot of these the DeFi tokens, or a lot of in the previous blockchains are switching to the DeFi market, is because there's a lot of opportunity, and there's of course a lot of application for the blockchain here. So the DeFi market is very interesting in the sense, for those who are not familiar, you can basically interact with, just like you would do a bank, get a loan, lend to others. You can provide the bank money, and they will give you yield in return for storing that cash with them. And it makes it all very easy and simplistic. And because of this ease and simplicity and new money being flowing into the market, people are very attracted to DeFi. And DeFi is a big kind of sentiment driver as well. We've sensed from Trade the Chain, a kind of a euphoria around altcoins and DeFi. We can see that Bitcoin sentiment has been lower than most of the large cap alts because everyone is accumulating these layer 1 tokens to interact with the DeFi chain. So you need ETH to pay for gas, you need SOL to pay for that, you need BNB to pay on BSC. So this demand and this euphoria kind of drives, kind of this outward, spurning growth, which means that if I love DeFi and I got a great deal on, a yield and I'm getting, 20, 30% on a great asset, killing, that's killing traditional finance for sure. I'm going to go tell my friends, I'm going to tweet about that. And a lot of these platforms even make it easy for you to share how much yield you earned, or I claimed some Ethereum, or I claimed this asset. So it's kind of it's marketing itself, it's building itself, and they're called Legos for a reason. One person builds one thing a year ago, and now 12 months later, 4 more projects have been stacked on top of that because it's open source. So it's a beautiful system, and it actually gives utility, whereas 3 years ago everyone was yelling, "Where's the utility?" And I think it's a really good experiment for the future of blockchain. I'm actually building a report about how the Fed and global governments worldwide are actually winking at DeFi because you can't get yields in traditional markets, and eventually big institutions, some are actually moving over and starting to participate in DeFi and interact with the protocols and stake coins and invest in projects. And if we're seeing, the big insurance companies, the big banks already start to take, ownership stakes in projects that are participating in DeFi, that means that they're watching and they're observing very keenly. And that's a signal for us, and I think for the broader market, that if the market is tripling in 3 months, banks and institutions are at the early stage. We've been doing it for a year. Get your, hold on to your hat. Things are going to get crazy soon, and keep track of that sentiment, because it's only going to, we're only going to see more tweets, and we're only going to see more volume, both in, how many people talking and how many people trading.
Yeah, okay. I mean, everyone is talking about yield, and it's certainly been an opportunity in these markets over the last year or so, which has opened people's eyes to it. I guess in the broader markets, inflation creeping back in this week, everyone's kind of keeping a close eye on that. So yields in the bond markets might be set to change at some point in the not too distant future. And it'd be very interesting to see, how this inflation story impacts crypto in general, especially something like Bitcoin, which, the argument's always been that it will become the inflation hedge going forward. So could be another interesting dynamic over the next few months to watch out for. Nick, it's been amazing to talk about all of this stuff, really interesting. And we look forward to speaking to you again next week. Thanks for joining us.
Yeah, thank you for having me. It was a lot of fun, and I'm glad to provide some insight. So thanks so much.
Okay, thanks, Nick.